Hi everyone, Oleg Tkach here with NFM Lending, and today I want to cover the topic of purchasing rental property specifically in different states. Now, for many of you guys, we've helped you, my team and I, we've helped you purchase your primary residence, maybe a rental here in Washington. Maybe we worked with one of your family members, and the biggest, question that we get asked after that first home is, how do we invest into real estate? How do we build a rental portfolio? And a lot of people, a lot of our clients, they look around, they look specifically in the state of Washington, they start running numbers, and they start to realize, based on the cost of real estate right now, based on where the rents are right now and how much money you have to bring in, it either doesn't pencil for them, and so they kind of steer away from it, or just there's too much money that needs to be brought in. And so, one of the reasons why we got licensed in so many different states over the past, year is because a lot of our clients started looking elsewhere. One of the best things about COVID is it almost eliminated the state borders, where now all of a sudden, buying a property and investing in Texas or in Oklahoma or in Florida became so much more real and easier for people to do. And so today what I want to cover on the video is, if you ever wondered, why are so many people buying out of state? Does it make sense? How does it look like? What I want to cover is exactly that. I want to give you exact examples of, different states, multifamily, single family, Airbnbs, what it looks like from a numbers perspective, so that way then you could decide, hey, is it right for me? Is that something that I want to look into? And is that something that I want to do? And maybe you want to either expand out from Washington, or maybe you looked in Washington and said, what, this real estate, investing into real estate rentals is just not for me. Maybe this will change your mind and have you put a different perspective on your investment strategy long term. The reason why I say long term is because I'm a firm believer that real estate, when you buy it, I'm a big fan of buy and hold. I'm personally not a flipper. I don't flip any properties. I think anybody that's flipping properties, that's their business, and there's nothing wrong with it, but it's basically, for a lot of people, their day-to-day. It's their day-to-day job, just like builders, when they build and sell, flippers, they flip and sell, they're making money for today. I'm a fan of being a long-term real estate investor where you're not quitting your day job, you're just buying one property here, maybe one every year, maybe one every 2 years. You go at your pace, and over a 10-year period, you build a rental portfolio of properties that one day, because we're all going to be there one day, or we're going to be, hoping to retire. One day when you retire, you generated enough cash flow that you can then, live the life you want, or maybe not work as hard, or do whatever you want with it, pass it on to your kids. And so that's what my overall rental strategy has always been in real estate. It's always been, whatever property I buy, my intention is to hold it forever. And the great thing about real estate is that, with inflation, which has been the biggest talking point of our recent time, is that real estate rentals, they just get better with time. Usually you have your rents will increase, increase. Usually your mortgage payment with rates and your balance will decrease, and the rents are increasing faster than your payment. Therefore, that spread over time continues to get better and better. And anybody that you talk to that has held a rental for a long term, when I say long term, we're talking about more than 5 years, has always went back and will tell you, I wish I bought more. I wish I invested into more properties, because it just keeps getting better. So with that said, I want to walk you through different states, different rental scenarios, and show you what it looks like and why so many people have been looking out of state. All right, so I want to walk you through a few different scenarios of different properties in different states. These properties are not the exact properties that our clients purchased. However, they're just examples of properties, of like properties that we've been involved in transactions with. And I just want to show you kind of roughly what's out there in different states at different price points. Let's start off with Ohio. Recently, there's been definitely some movement in the Ohio area. And if you look here, we have a fourplex, and the fourplex that we have, the purchase price of that fourplex is $390,000. And so if somebody's going to be purchasing a fourplex, they're putting 25% down. The average interest rate right now as of today is about 6.5%. That's what we used for all of our different scenarios that we're running through, just kind of what the averages are. Sometimes they're a little higher, sometimes they're a little lower, but that's roughly what an investment property is today. Now, of course, primary is lower, but we're talking about investment properties. And so with 25% down, and the closing costs and everything, you got somebody coming in with about $105,000, and the basically the rent that they're receiving is about $1,000 a unit, and that's about $4,000 a month for 4 units, which means that their cash flow is about $1,577 approximately a month, and so after their operating expenses, taxes, and insurance, and everything else, they're looking at about $1,200 a month, which if you take that over a yearly basis, you're looking at somewhere, let's see here, about $15,000 a year is what they're making as they're paying off their mortgage and so forth. Okay, that's what we have here in Ohio. All right, so going back to it, let's look at a different property, and let's go to Texas. And so San Antonio, Texas, if you look here, this is an example of a newer duplex. It costs $575,000. And if we look at the property analysis, you see that this property, the cash flow on this property, so the 25% down, closing costs, everything, about $155,000 is what's required. The cash flow is $799 a month. That's the starting cash flow, assuming the rents are going to be $1,100. Now, for those of you that have rentals, you know that rents are rising really quickly, and so this is going to be starting off with a $10,000 a year profit. If rents increase by $100 a unit, when they increase, that's $400 a month, that comes out to be $4,800 a year. You look at how quickly you go from $799, or we should say $800, to you increase rents by $100, you have 4 units, you're at $1,200. If rents go up to $1,300 a unit, now all of a sudden, you are now making $1,600 a month in cash flow. So this is an example of a property in Texas. Let's see here. Let's go through another one. And let's go to, Oklahoma. Here's a property, single-family residence in Oklahoma. The purchase price is $193,000, and so you would need about $52,000 out of pocket with the down payment, closing costs, all that. Your cash flow is $453 a month. This is a perfect single-family rental, makes you about $6,000 a year, and so your cash-on-cash return is 10.4%. And it's to your typical standard nice property, single family, great rental. This is kind of what our clients are after in Oklahoma. Let's see here. Next, let's go to Florida. So Florida has been a big one, and in Florida, what we've seen is a lot of people are purchasing Airbnbs. So whether it's in Florida, whether it's in Texas, whether it's in Arizona, Airbnbs are, you could say, kind of the new modern rental, so to speak. You get to enjoy the property, and then you get to rent it out when you're not there. So what we did for this analysis is we took a property in Sarasota, purchase price $480,000, and so the total cash needed is about $130,000. You see that we used $250 a night for rent, and we also used 75%, you could say, nights rented per year. So essentially 3 out of 4 weeks is what we're using for this. So your typical kind of Florida rambler. And the cash flow for this property, now this is after expenses, would be approximately $2,800 a month. Your cash on cash return is 26%. Now, the one thing I tell people is Airbnbs will definitely make you a lot more money than just regular rental properties. At the same time, too, they do require more management. You have to, talk to people coming and going. You have to, facilitate cleaners to come out there and everything else. But for those that are looking for that, they're looking for more than, for a higher return, and Airbnb is definitely the absolute best way to go when it comes to maximizing your return and being able to use the property for yourself. And so we're seeing a lot of people purchase in Florida vacation homes that are using them for Airbnbs as well. And so again, keep in mind that cash flow is after your mortgage payment, your taxes, your insurance. That's what we have in Florida. Let's see. Let's go to another property in North Carolina. North Carolina is also a very hot area where a lot of our clients are moving to. And so if we go to, this is in Monroe, North Carolina, which is just outside of Charlotte. This is a 2-unit multifamily property. And so if we look at the property analysis, you'll see that you purchased this property for $450, 2-unit, 25% down, cash needed about $121. Roughly, again, 6.5% is the rate we've used for all these scenarios, which is kind of the average investment property rate. You'll see that the cash flow per month is, so if we look at what do they rent out for, you're looking at basically them renting out for $1,800 a unit each. That's kind of the going rate right now in that area. And you look at $3,600 a month after all the mortgage payments and everything, you're looking at a $1,100 in cash flow, which comes out to be approximately $13,200 a year. Now, the one thing that I want to state when we're, we ran through a few different properties and we could keep going, but that was just to give you an idea of what's out there. The one thing that I want to just kind of share is just kind of the long-term investing. If you look at a property, let's just say, I'm just going to pick a random one. Let's say let's go back to that North Carolina property, okay? And let's think long-term, not short-term. You have a property that you purchased for $451,000, you put in $121,000 into it, okay? In 30 years, assuming you do nothing from a standpoint of refinancing, paying extra, or anything like that, in 30 years, you're going to have a property that you're going to pay down to zero. Your starting amount would be $338 as you see, but in 30 years, you're going to owe zero, okay? Now, with that said, if you think about it, 30 years from now, I think we could agree all properties, whatever the price is today, is at least going to double. So your purchase, the value, let's just say is going to be $900. That's super conservative. We're going to be sitting at $900,000 in value. Now, at the same time, too, let's take that cash flow of $1,093, and let's assume that rents don't increase, which is impossible. Let's just say they never increase. If you think about it, in 30 years, you're going to make $393,000, assuming they do not increase. So $393,000 is what you'd make in income. In addition to that, you're going to be debt-free in that property, and it's going to be worth, let's say, $450,000 more, $450,000, which means that if you take that, you're looking at approximately $843,000 is what you would gain on your initial investment of $121,000. That is assuming rents don't increase. Once you factor in rent increases, you're looking well into the $1.1, $1.2 million range, and which is in a 30-year period, you're taking your $121,000 and 10 times your investment. That is basically 1,000% return in a 30-year period. This is why people say most money is made in either the stock market or in real estate. And in real estate, it's not made over a month or two, it's made long term. So that's what I want to show you guys. So there you have it. As you look at these properties, the one thing that I want everybody to think about is that real estate is the long game. You're always going to succeed in real estate if you think long term. You know, a lot of people have been asking me lately, is this a good time to buy? What's going to happen in the market? What's going to happen with home prices? Are they going to go down further? And in reality, no one knows. We're all guessing. And my guess is just as good as your guess, is just as good as, you know, your family members or your friends' guess. But here's what we know. If you look at 10 years from now, and we ask ourselves a question, 10 years from now, where will home prices be? I think that most of us, 95, maybe even more percent of us, will say they're definitely going to be higher than where they're at right now. When you look at rents and you say, you know, 10 years from now, where are rents going to be? I think we will all agree that rents are going to be way higher, whether it's, you know, Airbnb rents, any type of rents, because inflation is going to happen no matter what. You got to keep in mind, the government's trying to keep inflation at about 3% to 4% a year. That's normal. So that means that in 10 years from now, imagine that, we're talking about 40%. If you don't even compound it, it's going to be higher. So the point that I'm trying to make is long-term real estate, you can't go wrong. Now, with that said, you should definitely strategize. You should definitely know, are you looking for multifamily, single family, Airbnb, which there's an upside to Airbnb where you're going to make a lot more money on it, but it also takes a lot more time. So the question is, do you want to put in that extra time to make that, you know, make that extra money? Because it's all a trade-off. Now, with that said, I'm also not saying that it's bad to invest into Washington. Washington works for a lot of people. I mean, I have a ton of properties that I own in Washington. I think Washington's great. At the same time, too, Washington isn't the only place where you can invest. And I think the biggest part of this video is to say, look beyond it, like a lot of people have, because a lot of people have been having a lot of success in other states. The barrier of entry is a lot lower in other states. You know, your rental cap is going to be higher in other states. So all I wanted to do is show you in this video what's possible out there. So that way, if you, a friend, a family member, anybody that you know is thinking about investing in a different state, we've been doing a lot of loans in a ton of different states. We can connect you with agents down there. We can, you know, get you pre-approved, show you what your options are for various scenarios. Reach out to us. We'd love to help, and hopefully help you build a real estate empire that one day will supplement your income for you, allow you to retire, and just allow you to live a better life. So we're here for you. Reach out to us anytime. 425-478-7676 is our number. Thank you for the opportunity to work with you, not only on your primary, but all your other purchases as well.